Hello, today we are solving May 2024 paper. Question number 2, part F. Evaluate the decision of Gallanna Homes PLC to issue ordinary shares instead of a debenture. So what is the advantage of ordinary shares over the debenture? So for this, you should know what is the difference between an ordinary share and the issue of debenture. Each has its own advantage and disadvantage. Okay. So you can take a screenshot of this. I have made a table here. So you should understand what is meant by issue of shares, what is meant by debenture, then what is the advantage of issuing an ordinary share as compared to a debenture, and then what is the advantage of issuing a debenture over an ordinary share for the company. Both are different ways of raising the capital in the company. Now, here evaluate the decision to issue ordinary shares instead of a debenture. So let's take the arguments. First one is it's easy to issue ordinary shares to the existing shareholders because a debenture is a more complicated process, or we can just say that ordinary shares is straightforward. No outside parties will have influence on the running of the company. Example, a place on the board which a debenture holder might request if they provide funds. And also the shareholders of Gallanna Homes do not have to pay any dividends. So they don't have to pay any dividends, which is useful if the company is short of funds. Not necessary to pay the dividends. Okay. And one is they will not, first point is they will not have any influence on the board. Okay. On the decision making process. Second one is you don't have to pay any dividends if your profits are less, or even if you want to use the profits for some other purpose if you are issuing ordinary shareholders. Whereas for debenture you have to pay some fixed interest, and okay, that is a one other disadvantage. So no interest has to be paid, so the profit of Gallanna Homes will be higher than issuing a debenture for which you have to pay a fixed interest, and this is going to help in the cash flow and liquidity. So the interest paid on a debenture could be substantial, having paid at the intervals of 6 months. Then no assets need to be offered as security when you are going to issue ordinary shares. Gallanna Homes PLC may have to offer non-current assets as a security to debenture holders. For the debenture holders, you have to issue some non-current asset. These would be forfeited if the company fails to pay the interest or pay back the debenture. These could be the property or the vehicles, which could seriously affect the running of the company if it is unable to pay back the debenture amount and or the interest amount. Then the issue of shares results in a lower gearing ratio, which we had already calculated. So earlier it was 22% and now it had been turned into 20.5%. So it's going to lower the gearing ratio for which is looked at by the investors. It will decrease the risk to Gallanna Homes PLC. Whereas the issue of debenture, it will increase the gearing ratio for the company. Okay, Gallanna Homes, it's because debenture is considered as a loan or a debt. So the non-current liability, okay, the non-current liability in this section will increase, causing an increase in the gearing ratio, and this is looked as a risk by the investors. Whereas if you have a lower gearing ratio, which is caused by the issue of ordinary shares, because capital employed is going to get increased, and so the gearing ratio is going to go lower, so which is looked at the investors as a good thing. Okay, it's not a risk. A company with a low gearing ratio is considered as less risky to invest. So the issue of debenture will increase the gearing ratio for the company. If the share issue is not fully subscribed, the shares may be taken up by a party who have underwritten the share issue. However, the party may charge a fee for the underwriting. Then what is the advantage then of issuing a debenture, or what is the disadvantage of ordinary shares when compared to a debenture is there will be huge administration costs. In issue of ordinary shares, we saw that there are so many processes, whereas for the debenture it's not such an expensive process. So administration costs are expensive than compared to a debenture. Then a share issue, it might not get fully subscribed sometimes. And then if the company, whereas debenture, it's fully subscribed because people will buy it because they are going to receive their interest and also dividends. If the company has a share issue underwritten, then a fee will be charged. So if it is not fully subscribed, and if they had to then the party who might take up will charge a fee, okay, for that. And if Gallanna Homes PLC then turn to a bank, suppose if they don't want and they turn to a bank for the funding, the company may see the company as a high risk and it will charge as a high interest, okay. So if they turn to a bank, they will charge high interest. So debenture might be a better funding if it is required for a limited time, okay, because it is for a limited time, then debenture is. But in conclusion, generally company tends to issue ordinary shares, okay, to raise the capital